you a U.S. green card holder planning to move to Canada? Whether for work, family, or a new adventure, moving across the border comes with significant tax planning implications that you must be aware of. In this video, we'll explore how your U.S. green card affects your tax obligations in both countries and what steps you should take to ensure that you're compliant and optimized financially. As a U.S. green card holder, the United States considers you a permanent resident for tax purposes, regardless of where you live. This means that you're required to report your worldwide income to the IRS, even if you're living in Canada. So how does this impact your tax situation when you move? First, it's essential to understand that your U.S. tax obligations don't end when you leave the country. You must continue filing U.S. tax returns annually, reporting income from all sources, whether earned in Canada, the United States, or elsewhere. Additionally, you may need to file other U.S. tax compliance forms such as foreign bank account reports, which is the U.S. Department of Treasury Form FinCEN 114, and the IRS Form 8938, the Statement of Specified Foreign Financial Assets, to disclose your foreign financial assets to the IRS. Failing to meet these requirements can lead to hefty penalties, so staying on top of your U.S. tax filings is crucial. At the same time, you'll also have to navigate the Canadian tax system, which could lead to potential issues of double taxation. When you look to permanently move to Canada, you'll more than likely become a Canadian tax resident, which means that you're subject to Canadian tax laws as well. Canada, like the U.S., taxes residents on their worldwide income. This dual residency status raises a critical question. How do you avoid paying taxes on the same income in both countries? The good news is that the Canada-U.S. tax treaty provides mechanisms to avoid double taxation. For example, if you pay taxes on income in the U.S., you may be able to claim a foreign tax credit in Canada, reducing your Canadian tax liability. However, the specifics can be complex, particularly when dealing with different types of income, like dividends, capital gains, retirement distributions, and government benefits like U.S. Social Security, Canada Pension Plan, and Old Age Security benefits. Understanding how to leverage the tax treaty is key to minimizing your overall tax burden. This is where a cross-border financial advisor, such as those at Cardinal, can provide invaluable guidance. Will help you navigate the intricacies of both tax systems to ensure that you're not overpaying and you're fully compliant in both countries. Moving to Canada doesn't necessarily mean that you lose your green card, but it's important to understand the implications if you surrender or abandon it. One significant consideration is the expatriation tax, which can apply to you if you give up your green card after holding it for at least 8 out of the last 15 years. In this case, you might be considered a U.S. covered expatriate under the U.S. expatriation tax laws. The expatriation tax is essentially a capital gains tax on certain worldwide assets, as if you sold them the day before you surrendered or was forced to abandon your green card. And this can result in a substantial U.S. tax liability, especially if your assets have significantly appreciated. However, certain thresholds and exemptions exist, and careful planning can help you mitigate this tax. Even if you keep your green card, you must consider the long-term implications, such as your ongoing U.S. tax obligations and how they interact with your Canadian tax residency. Balancing these considerations requires a strategic approach, which we specialize in at Cardinal. We work with clients to develop personalized strategies that align with your long-term financial plans while minimizing your tax exposure. Your move to Canada also affects your retirement and estate planning. If you have U.S. retirement assets such as IRAs or 401k or 403b plan, you need to understand how withdrawals will be taxed in both countries. The Canada-U.S. tax treaty plays a crucial role here. It can help you avoid double taxation on these distributions. Estate planning is another critical area. As a green card holder living in Canada, your estate could be subject to U.S. estate taxes upon your death, in addition to Canadian taxes. Proper planning is essential to ensure that your assets are passed on to your heirs in the most tax-efficient manner possible. This might involve setting up trusts, revising your will, or considering where you hold your assets. Given the complexity of cross-border estate planning and retirement planning, it's crucial to get expert advice tailored to your situation. Moving to Canada with a U.S. green card involves navigating a complex web of tax obligations in both countries. It could also lead to U.S. immigration challenges as well. And with the right proper planning and guidance, you can manage these challenges effectively and secure your financial future. At Cardinal Point Wealth Management, we specialize in helping individuals with cross-border financial planning, ensuring that they stay compliant and optimize financially their overall situation.